What's going on, everybody? Just give me one quick second. This is a pop-up video. So if you are watching this, you're watching this while I'm doing it live and being able to go through. Just going to end up helping out everyone. And I'm excited to be able to talk about it. So here we go. What's going on, everybody? This is Travis Witherspoon. If you do not know me, I'm a Forex trader. I've been trading for the last 5 years. Typically, I end up doing everything in the morning right around 7 o'clock. To 7:30. Obviously, I end up holding classes and everything else like that for our boot camp and mastermind class. And what I end up wanting to do is offer you a chance to be able to hop inside of our boot camp class. It's going to end up happening October the 22nd to October the 26th to October the 30th. But I'll go over that a little bit later on. So this video is going to end up being dedicated to a lot of different viewers and people that are new, people that are old, people that are experienced some drawdown, people that are just trying to confirm on what they're doing for their overall trading. It's going to be very quick, it's going to end up being straight to the point. This is if you want to be a Forex trader. So if you want to be a Forex trader, if you want to be a trader in general, whether it's stocks, bonds, indices, or anything else like that, this is 7 rules that you have to be able to follow to be able to be, or in order to be a profitable trader. So if you would, please make sure that you like, share, send this video to people that you think that may end up being interested in being able to learn it. And we're going to end up hopping into it very quickly. This video should not take that long, but I'm going to end up giving some examples, and then after that, we end up moving on from there. So with that being said, let's go ahead and talk about the top 7 things that you need to know, or the top 7 rules that you need to follow every time that you end up taking any type of trade. We end up going from there. The first rule is this, and I'm getting ready to show it on my screen. The first one is that you need to be able to buy low prices inside of the buy zone. Okay, now what does that mean? When you're looking at being able to buy, that means that you need to, once again, look for a position to be able to get in that will allow you to be able to get a very low quality price. So now when you end up getting into the market and you're looking to be able to sell, you can sell it at a high price and be able to make a profit off of it. Okay, so please understand that there's profit margins on every trade that you end up taking, meaning that if you end up buying low, your risk is going to end up being something, your reward has to be something else. So you always want to stick to a good risk reward strategy of maybe 1 to 2 or maybe 1 to 3, which means that if you're risking $100, that means that when you end up trading and taking profit, you want to take at least 200 or 300 or more when it comes down to that overall risk. When it comes down to that overall reward. If you're only risking 100 to make $100, then quite frankly, you're wasting your time, because that means that you have to win 6 times to at least be able to break even. Okay. The next rule is that you need to be able to sell high prices inside of the sell zone. Now, same deal. You want to be able to buy. You want to be able to sell high prices. Once you end up getting that high price in the sell zone and being able to go from there, that means that now you're getting a very quality price that you can be able to sell down. And then after that, allow yourself to be patient to be able to give yourself a little bit of room when it comes down to selling in that market. Now, what is the buy zone? What is the sell zone? For some people, you end up using different indicators to be able to place yourself inside of that position. That may end up being a stochastic, that may end up being a MACD, that may end up being an RSI. Whatever you end up deeming to be some type of thing that will tell you what the buy zone is and what the sell zone is, then that should be the overall thing that you should use to find out where that actual low price is, along with price action, to be able to understand when you're going to get into the market and how low and how much value you can be able to get into the market. There's no greater feeling in doing any type of trade is that when you end up taking that trade, let's say if you're buying, and as soon as you end up buying, a minute or 2 minutes later, you're automatically in a profit and the market starts moving in your overall direction. Right? Or when you're selling and you sell at a high price and the market already moves down. There's no better feeling in being able to have that, because that means that you're locking in profit before as you actually end up getting into the market. Now, the reasons why that happens is because you end up buying low prices in the buy zone, or you sold high prices in the sell zone. If anywhere in between that, you're going to start seeing that the market will have a little bit of consolidation, or will take a little bit of time to be able to move yourself into profit. So first 2 rules you always got to follow: buy low prices in the buy zone, sell high prices in the sell zone. Third rule: we don't want to buy future high prices, or we don't want to sell future low prices. Now, what do I actually mean by that? If we're looking at a chart and we look at where the market actually is, let's say we're looking at oil in this case, when it comes down to the overall market, we can see that down here, this market actually fell all the way down to this low price area right here. Now, in this case, this market kept on falling and it fell down to an all-time low. So the question is, should you be getting into this market looking to be able to sell down at this particular point? The answer is no, because if this is the low price of the day, if this is the low price of what's done happened over the course of the last 2 months or whatever been the case, there's a better chance that the market will end up starting to push back up against you compared to actually falling down again low from there. So once again, that goes back to the original rule. You want to make sure that you sell at high prices in the sell zone instead of being able to sell at low prices, which means that it's basically in the buy zone at that particular point. Now, you cater and you look at that and you tie that into what's happening inside of the buy zone right here, or basically what's happening inside of this overall spot, you can see that the market is at a low price, right? So you sell at a low price, the probability is going against you for being able to make money. Okay. Now let's take a look at it from another perspective. Let's say if you wanted to buy, should you be buying at high prices? Well, let's take a look at this fractal high movement up here. We see that this market ended up pushing all the way up and it got up to $43 a barrel when it came down to this overall movement, and this was the highest price that the market ended up going up there. You can automatically see that the people that started buying when the market ended up getting up to right here in the market automatically got kicked out of the market, and the market started going against them, and people started taking profit in that area. Now, once again, basically what you're trying to do is buy at the future high price of this overall market, or the high of the day, or in this case, a fractal high at this particular point. Well, once again, you lose the probability of being able to make money in this overall position. There's a better chance of you losing money based off of where you end up getting in at. So you have to keep that in mind when it comes down to overall trading. Now, how do you know what a buy zone, what a sell zone is? Well, if you look at this, you can see that when the market, in my case, is above 90, then that means that the market is compared to be in the sell zone, right? So if the market is in the sell zone right here, then you should be looking to sell instead of looking to be able to buy. This is a high price compared to being a low price, okay? Now, once again, go back to the original 4 rules that you want to be able to take a look at. You want to buy low prices in the buy zone. You want to sell high prices in the sell zone. We don't want to buy future high prices, and we don't want to sell future low prices. So both, all 4 of those rules kind of tie in with each other. Now, next rule that you want to be able to pay attention to and keep that in mind is that you always want to trade with trading alignment. Okay, now what do I actually mean by this? My students talk to me about this all the time. And this is one of the biggest things that I always harp on when it comes down to being able to make any type of trades. When you're looking at trading alignment, you want to make sure that the weekly and the daily are trading with each other. Okay, meaning that they're trading in the same direction. So you have to look at trading this based off of the weekly chart, and you have to be you were looking at doing a position type of trade in this overall position. Then that means that you could be able to trade and know that on the weekly you are in a good position to be able to get into, right? And you can sell and you can buy this for a long time. Well, you will want the daily to be able to trade in that same direction, right? So if the daily is trading, and the daily is basically in the buy zone, and you can buy the low price in the buy zone on the daily, and you can buy the low price on the buy zone or the weekly, then what's happening is this: you have more people that are going to end up trading with you at the same time, which builds momentum. And understand, when there's momentum in the market, then there's movement. If there's no momentum in the market, then the market is not going to move, and it's going to take a lot of time for the market to be able to go to where your actual position is going to end up going at, or where your take profit is going to end up being. We don't like holding our we don't like holding money in the market, right? And keeping that money in the market for a long time if there's no movement in the market, because there's a better chance that the market will end up going against you. Okay, so you always want to trade with trading alignment. Now, me personally, I go weekly and daily. For some people that are scalpers, they may end up going 4 hour and 1 hour, right? Or 4 hour and 15 minutes. But whatever your trading alignment is, you always want to be able to look at a higher time frame and then pair it up with a next higher time frame, and then after that go from there. Understand, when you do this, you have time on your side, and when you have time on your side, you can be patient, and this allows you to be able to step away from the computer and allow the market to be able to move instead of just staring at the computer and then hoping for the market to be able to move. Right? Typically, when you're staring at the market and you're hoping for the market to be able to move, you're going to end up getting yourself out of that trading pair, because you're not giving yourself a chance to be able to make any type of movement or make any money off of that movement. Okay, so just keep that in mind. All right. Next one. When there is a breakout, there will almost always be a retest. Okay. Now, what do I mean by that? When you're trading in the market, and we're talking about consolidated pairs, we're talking about any type of movement from there, typically what will happen is the market will give you one chance to be able to find that overall resistance, and then, that overall retest and break from there. Now let's take a look at oil again. I know I'm harping on oil, but we're going to look at this ascending triangle. Obviously, we're looking at consolidation. All right. We have three different areas where this actually happened in this market, and there's one area where it's happening right now. Well, we can see that in this consolidated pair, this market ended up going from support to resistance, fell down to support, hit a resistance again, and then after that hovered around, and then all right, so we're back there. So going back, we're looking at this overall market and seeing how this market is reacting. The market ended up hitting support, hit resistance, fell down to support, went up to resistance again, and then after that broke down right around this area. I'm going to use this orange arrow to be able to show you initial breakdown area actually ended up happening. So from that breakout, let's tie back to what we end up saying when it comes down to the rules. Should we chase after this market? The answer would be no, right? If we were to chase after this market, then the market would end up being in the buy zone when we end up getting into this actual price, right? Or at least not in an area where we should be looking at being able to trade it. Typically, what will end up happening is this. Once the market ends up breaking out, the market will end up rejecting or will end up retracing back up to give you some type of retest in that overall area. So essentially, the market broke out right here, retested, and then hit the back of this overall trend line again, right here in this area, and then reject it one more time and gave you the break to be able to go into it. So once again, once you end up seeing a rejection or once you end up seeing that breakout, then typically just wait for the retest to end up happening. Sometimes it will be very quickly, and you have to keep your eyes out on the market, and you have to understand that when you end up getting that opportunity to be able to trade, sometimes it will happen, and then after that you can go from there, right? This market ended up taking 6 hours to be able to break out, and it took almost 2, 4, 6, 8, 10, 12 hours to be able to retest before falling again. But if you would have chased the market and got in right here, right when the market would have failed, then you would have automatically been down about 30 pips before the market actually fell again about a half of a day after that. Okay, so by being able to allow yourself to be a little bit more patient, you're putting yourself into a better position to get a better price and to be able to sell it right when the market basically broke out at in the beginning. Okay, so once again, once there's a breakout, there's always a retest. So take a look at another example. Let's look at this triangle that ended up happening right here. As we zoom down, we can end up seeing that this market went through another consolidation pattern where the market ended up having resistance, fell down to support, hit a resistance again, fell down to support, hit resistance, broke down. We have low trade volume, and then bam, we have our breakout right there. All right, breakout ends up happening. Do you chase after the breakout? In this case, no. Typically, what will end up happening is that once the market ends up breaking out, because it took so much force to be able to break out, typically what you end up seeing is that the market will end up putting yourself in the sell zone, right? Well, answer this question. Do we buy in the sell zone? Do we buy high prices? No, we buy low in the buy zone, right? So allow the market to be able to retest. In this case, it took 4 hours to retest. And what ended up happening was this. Market ended up pushing right back up and then fell right back down to where their original position was. You may not have gotten in the sell zone, but you caught it right there at the point where the market ended up breaking out. And then after that, you have areas to be able to get in and then be able to trade from the upside. So once again, allow the market, if the market ends up breaking out, do not chase it. Allow the market to be able to come back to you. And then after that, trade it from there based off of the retest. And what you're doing is placing yourself into a better position of being able to go from there. All right. Last one that literally just happened a few seconds ago. What we're looking at right now, we're looking at this overall position. We can see that oil currently end up breaking out of this overall consolidation that ended up happening just earlier. It literally just went up to $41 a barrel. Now, if you would have chased and you would have got into this market right around here, right around the 41.60 area or anywhere else like that, right now you're automatically down on this overall trade. What is the market currently doing right now? It's basically retesting. So if this market gets into the buy zone and it gives you an opportunity of being able to buy up, then obviously you will get it at a low price, basically at the support of this overall area, turning previous resistance into future support, which will allow you to be able to make a little bit more money while the market is actually going up. Okay, hopefully that makes sense. Last thing, and the most important one with me when it comes down to overall trading, I want you to understand that, is that when you're trading this overall market, you want to make sure that you want to make sure that you don't trade until you have confirmation. Okay, and what do I mean by confirmation? Essentially, you have to have some type of entry and exit strategy that you have to be able to get into inside of the market. My entry strategy typically is that I end up looking at a couple things. I look at price action, but I look at counter trend line breaks. That's my way of being able to get in. And typically, based off of a counter trend line break, it makes it a little bit easier to be able to get into the market and feel comfortable about what trade I'm actually taking. So let me give you an example of what that actually means, and then after that, we can be able to go on from there. Let's take a look at the U.S. dollar index, right? So if we look at this overall movement, we can see that this market has remained to be bearish. Or right here at this purple line, this market was basically bearish. So market bounced down, failed, hit right on this trend line, hovered around, rejected again. But then right when the market ended up breaking out of this overall position from here, the market retested and it stayed above this trend line again, which means that it turned, if you looked at it, basically it ended up turning one side of the overall area into the buy zone and turned one side into the sell zone. Well, this would have been your sell zone area. So you would have got into this price, you would have looked to be able to sell right here. And this would have been, anything above it would have been your buy zone. So if we're looking at potentially buying, then we're only looking at the market breaking out of this overall position and then retesting from there. So with this combining rules to be able to take a trade from there. So market broke out. Once the breakout happened, the market ended up rejecting. From that rejection, then you looked at buying again. Well, what's the other rule? We buy low prices in the buy zone. The market was basically in the buy zone, and we bought it based off of a confirmation to be able to go back up. If you would have been in that trade, then quite frankly, you would have been up on this overall move and went from there. Okay. Now, as we get ready to close out, hopefully this makes sense. If you're interested in being able to learn a little bit more, all you have to do is be able to go to, give me 1 second. Everyone, just give me 1 second. Okay. Sorry about that. My youngest son ended up waking up. Give me 1 second, big boy. If you're interested in being able to learn more like this, please hop into our Carter Cow Academy. Or if you want to hop inside of our boot camp, what we're going to end up doing is that from October the 26th to October the 30th, we're going to end up having 5 different sessions. Each session is going to end up being an hour long of high impact information that's going to end up helping you out for being able to trade. If you're interested in being able to learn a little bit more, when it comes down to being able to do that, you can go into the description inside of the actual link and be able to get that information of being able to go from there. It's bit.ly/believe in yourself Forex, and it can be able to give you some more information and also help you out for being able to purchase and reserve your seat. So if you're interested in being able to learn a little bit more from there, that will be your opportunity to being able to do so. Obviously, I like being able to do pop-up videos. Haven't been able to do pop-up videos all that much since we have been going back to classes and everything else like that. Obviously, I'm a school teacher, so typically when I have a chance to be able to do it, it's always cool to be able to get that done. So like always, I see each and every one of y'all in the morning. Remember, we end up having Trade with Travis sessions from 7 a.m. to 7:30. If you like this video, please make sure that you share it with somebody that you think that will be very will end up definitely thinking that it will be something that will be beneficial for them for its overall trading. Once again, Forex, stock markets, index, anything else like that, you can be able to hop in and go from there. But like always, plan your trade, trade your plan. I see each and every one of y'all in the next video.